evening, Sanbonani, Dumelang, and welcome to the Wednesday edition of the Private Property Podcast. I'm your host, Zama. We're on episode 122. And as customary, it is a Wednesday, and as every Wednesday, we're speaking to somebody from Absa. And I'm sure that so many of us have this particular topic at the top of our minds. We often have so many questions when it comes to how we can best navigate this one. And we always think we want to bring the best professionals to be able to answer the burning questions that we have, especially when it comes to whether it's our property needs or certainly when it comes to our investment needs. And that's exactly what we're going to be speaking about this evening, looking at how you can protect and grow wealth with these investment and advisory options. I'm sure a lot of us probably have so many question marks about the best ways to, either start investing, how to grow our investments, how to have a better relationship with the financial institutions that we work with. And that's certainly something that's a pressure point. I think whether you're a millennial or you are slightly older, it definitely is something that I'm sure a lot of us need some kind of help with. And that's exactly what we're going to be speaking about this evening. But before we get started with our evening's conversation, as with every Wednesday, of course, besides having Absa right here on the Private Property Podcast, is that we also have the First Time Home Buyers Show. And that's exactly what's going to be happening just after the Private Property Podcast, where Esty Claassen will be bringing you this week's edition of the First Time Home Buyers Show. And she'll be speaking to somebody who needs no introduction. We've had him here on the Private Property Podcast, and I'm sure that many of you at home loved, having him on the show before. That's, of course, Leroy Slava, who's quite a seasoned investor now. But this evening on the First Time Home Buyers Show with Esty Claassen, he's going to be talking about how I found property success through flipping my first home. So if you're a first-time home buyer, perhaps you've already bought that first home and it might need a little bit of TLC, you're looking at different ways you can flip it and make some money off it, then do make sure that you stay tuned just after this episode to join Esty Claassen with Leroy there. But let's get talking about investment, growing our investment, protecting our investment. I'm joined this evening by Ricardo Smith, who is the Head of Investment Strategy at Absa Global Investment Solutions. Ricardo, good evening, and thank you so much for joining us.
Evening, Zama. Thanks for having me on your show.
It's only a pleasure. I think, Ricardo, one of the probably the best starting points when we want to, talk about growing and even protecting our investments, especially right now, is what are some of those, best ways that individuals can grow Private Property Podcast with myself, Zama. It's almost as though the tech gods don't want us to talk about growing and protecting our investments. It's almost as though we must just YOLO with our money right now and not, look at the best ways to grow and invest. But of course, we're not going to, listen to the gremlins that are in the system, but instead we're still going to look at how do we actually grow and protect our money, especially right now. And that was, of course, the first question I was asking to Ricardo Smith, who's, of course, the head of investment strategy at Absa Global Investment Solutions. So, Ricardo, we are in very, economically, turbulent times, or certainly uncertain times. And I'm sure a lot of us, especially if you look at those of us who are millennials, this is the first time that we're living through this an economic crisis of this nature in our age group, whereas our parents would have lived through, the 2008 financial crisis. And now we are feeling this crisis as, full-on individuals. What would you then say, certainly from an Absa's perspective, and even some of the services that Absa has, would be the best ways for private individuals to grow and protect their investments?
Thanks, Zama. It is indeed, uncertain times with the COVID-19 pandemic, particularly the impact on markets, economy, and from a health perspective. What I would urge investors during times of uncertainty such as these is to stick to the objective of investments, in particular the time horizon of those investments, and not let short-term market movements influence their decision-making process when it comes to investments. From an Absa perspective, the cornerstone philosophy of our investment process is diversification. And the core objective of diversification is protecting our clients' portfolios from massive drawdowns during periods of heightened market volatility such as these, whilst continuing to participate on the upside when markets do indeed rally. And within this framework, our financial advisors, wealth managers, and investment specialists, sit with clients to understand their needs, to understand their objectives, and create tailor-made investment solutions that are well diversified and meet their long-term objective. And so I'd really reiterate for investors to not let short-term market movements or current climate influence their long-term objectives.
And, Ricardo, maybe take us through, some of the objectives that you've found, certain customers have. Because what I've certainly seen, especially during this period, is you'll find that so many, people were, COVID hit. You may have had, let's say, various policies that you were saving for whatever reason, and COVID hit. And we saw that when COVID kind of hit even South African shores, a lot of things, the value significantly went down. And when you look at the graph, it's actually such a shocking graph because there's a very sharp decline. And you saw so many people, cashing in a lot of their savings and investments, and they were cashing it in on that downturn, with a lot of them probably thinking the market is not going to recover. This is, the end is here. Let me rather just cash in all my money. Whereas if you're cashing in, just before the bottom, you've lost out so much of, essentially the value of the money that you had put away. But then we saw, of course, the curve essentially go up. And when I look at that curve, when I look at that graph, it's such a shocking graph to look at, because you also realize that had people waited even a month, never mind waiting a year or 2 years, just a month, there would have been a significant difference in how much you would have been able to make, and a lot of your investments would have recovered. So as much as you were kind of losing money as it was going down, as you're saying, I think one of the big things is people unfortunately didn't make that decision. They were taking out their money as the markets were turning and making essentially long-term decisions based on something that was happening right here and now. So what have you essentially found are some of the people's objectives that helps them keep that time horizon? Because not a lot of people understand sort of the time value of money and how it's in certain accounts or investments to weather these kinds of storms.
No, for sure, 100% right there. And what we've actually seen, not only from this market crash, but from previous market crashes, where markets have crashed by levels in excess of 20%, they've typically rewarded investors with double-digit returns, with bull market rallies that have typically lasted for periods of up to 8 years. And even in this crash, the markets are still negative on a year-to-date basis, but moderately so. having recovered much of the losses made mid-March. Um, and really, when you think about objectives, you really need to have a goal-driven approach towards investments. And some of those goals may indeed be short-term, and some of them may be mid-term and long-term. The key is really to have your money in the right places. So for short-term goals where you would require short-term liquidity, you'd want cash and cash equivalents like money markets and core income funds. But really, in a multi-asset, high equity, balanced portfolio with property and other risky asset classes, both locally and offshore, it's really for long-term growth, and it's really thinking about, firstly, if you're a young individual, really thinking about retirement and growing your discretionary investments. And even, when you reach, that retirement, you also have to think about it from an intergenerational perspective, in terms of what you leave behind, once you're no longer here. And certainly you don't want the cost of living to overcome you even once you reach that retirement age. So it's really long term. You're looking at periods of in excess of 10 years once you look at this high equity portfolios. And for shorter goals, you want a medium to low equity and cash equivalent portfolio for your liquidity management. The key is really to speak to a financial advisor that will do a needs analysis, look at your current needs, your future needs throughout the life stages that you're going through, both from a wealth accumulation perspective and also from a wealth protection perspective.
And, I think, Ricardo, one of the big things there, I can already sense that we're probably going to, call you back to be our guest here on the Private Property Podcast, because those are some of the key, I'll say, issues that we should probably go into as much as possible, because so many people at home, certainly those who watch the show, are very familiar, for example, with, property as an asset class, but there are other asset classes that you're able to tap into that can even, put you further in terms of making sure that you meet some of your property goals as well, and have other asset classes that you, of course, invested in, are able to maximize as well. So I'm already promising viewers at home that we'll see if we can have Ricardo back on another show where we even do a nice breakdown of the various ways to look at a holistic perspective of the various asset classes that we invest in, and not just property, which is, of course, what we focus on here quite a lot. Now, Ricardo, one of the things that you actually touched on is the importance of working with the financial advisor, who's going to do that needs analysis and really have you understanding what your needs are, what your financial needs are, what needs to be done, what still needs to be paid off, what are your financial goals, which probably brings me to, my next question, which is around, and this is a term that gets thrown around quite a lot, especially when we're, speaking to bankers. That is, of course, relationship banking. So understanding what exactly then do we mean when we talk about relationship banking, especially when we're looking at how people are increasingly, using technology, whether we're using our banking apps and not even going into the branch. So how are we having that relationship with, let's say, various people within the financial institution that are going to help us on our financial journeys and make sure that we meet our financial goals?
For sure. At Absa, what relationship banking really is about is customer centricity. It's about putting, the customer first and building a professional relationship with your customer, understanding their needs, understanding their objectives, understanding their financial personality, their risk profile. How averse are they to risk, and how risk-seeking are they? Because during periods such as these, those emotions will be tested, and you definitely want to profile your clients in the right manner and to identify all your clients' financial goals and financial needs throughout their life stages, and regularly review that, because no one individual is static, and circumstances always change. And from a technology perspective, how we view technological innovations is really as a tool to help us meet these client needs in a manner that is very efficient and effective. So we welcome technology innovations whilst also leveraging the relationship banking, and we don't see these things on opposite sides, but rather meeting the same goal.
And I think it's such an important one, Ricardo, because so many of us at home probably don't, we're probably more often than not intimidated, with our financial institutions. And you very likely don't want to have to deal with somebody at the bank. Sometimes the experience is not that great, to the point where you don't utilize some of these services, because we probably underestimate, even something like sitting down with a financial advisor, perhaps not even thinking of which policies you should be taking out, just having a conversation first and really getting a sense of where you stand financially, and what your financial needs essentially are, what your financial goals are, and then only start talking about what are some of the things that you should be doing or should be doing in order for you to be able to meet those investment goals and objectives, as you mentioned earlier. We're going to go for a quick break. When we come back, I want us to then look at how we go about it in starting our investment. I think it can be such a daunting experience, starting your investment journey, especially if it's something that you don't necessarily tangibly see. I think oftentimes with property investors, they tend to like leaning towards property because they always say it's something that I can touch, and in the event where something goes wrong, I know I can sell it, I see it. But of course, not every asset class is like that. So understanding the different ways that other investments work, and how easy it is to access some of the other investment, asset classes, because I think we underestimate the barrier of entry when it comes to property and the various opportunities that are available when you tap into other ways of growing and even protecting your investments. We're going to go for a quick break and we'll be back just after this. Welcome back to episode 122 of the Private Property Podcast. I'm your host, Zama Khumalo. This evening, it is a Wednesday, and we are joined by Absa. We're looking at ways to protect and grow your wealth with, these investment and advisory options. I'm speaking this evening to Ricardo Smith, who's the head of investment strategy at Absa Global Investment Solutions. And of course, it being a Wednesday also means that we're going to be bringing you this week's edition of the First Time Home Buyers Show with SD Claassen. Do tune into the show right after the Private Property Podcast. She'll be speaking to Leroy Slava, who's going to be exploring how he found success through flipping his first home. So if you have ambitions of flipping, you want to learn from somebody who's done it, learn from the mistakes that he's made along the journey, because I can tell you now, your first flipping project always has some other mistakes, whether it's with a contractor or not costing the work effectively, you're always going to have a snag. So make sure that you tune in so that you can learn from those mistakes so you don't have to make them. But to get back to my conversation with Ricardo, Ricardo, I think one of the big things, with viewers at home, and certainly even myself when I think about investment, is you sometimes think you need a lot of money to start investing. Never mind property, just any kind of asset class. You think you need to be earning a lot of money, and that's the only way you start investing. So oftentimes, certainly if I look at millennials, sometimes you do put it off for the longest time because you think maybe I'm just not earning enough to start investing, even if you do have a little bit of excess money at the end of the month. Perhaps take us through then, what would be then required if you wanted to start your investment journey, and when the best time to start would be. Must we wait until we're kind of mid-management and in our 30s to start that investment journey?
For sure. In terms of the best time to start investing, it's always now. The compounding effect of investment returns has shown us in history is that time spent in the market is significantly more important than timing the market. And from the perspective of how much to start investing, there is never too little an amount to start investing. However, what I would urge investors is that you need to periodically review how much you are investing as your financial conditions and your objectives change over time. And how to access these investments, you could go, depending, we've got different distribution channels. You could literally walk into an Absa branch and speak to a financial advisor. You could go online and buy our financial products if you don't require any advice, and you could download some of our apps where you could purchase various investment products from Absa. But certainly, I would encourage one to first speak to a financial advisor so that they can guide you through all the products that are available at Absa, and in particular the ones that meet all your needs and requirements.
Ricardo, you were mentioning just now how we sometimes probably don't realize the compounding effects of money. And I love, there's a model that you can easily build to kind of look at that, right? Where if you're putting in X amount of money, let's say by year X, it's X amount, and you kind of leave it in an investment account or any other kind of thing that you're investing in, you're able to get a sense of how much it would be by the time you are retiring. But not a lot of us probably build those models. I mean, we're even speaking earlier on about how even when you make your investment objectives, you must understand what the time horizon of that particular investment is. Perhaps take us through how impactful then economic factors are. I mean, we've certainly seen, if you would have started, let's say, even investing pre-2008 crash, there would have been multiple economic factors in South Africa. We've seen how our markets also respond to international news, the price of oil going up and down, and that having an effect on the economy and essentially people's investments. So what would you then say are some of the economic factors so at a micro and at a macro level, especially on our investment and our returns?
For sure. So, from a macroeconomic perspective, equity markets are correlated to economic growth, corporate profitability levels, and valuations. And if I were to speak even closer to property, I would say certainly interest rates have a huge impact on property markets. From the economic and corporate profitability perspective, it impacts unemployment levels, it impacts rental yields and rental incomes, and it impacts demand on markets. And so with the current environment, certainly a lot of risky asset classes have become quite attractive from a valuation perspective, in particular property. But when you look at the interest rate environment, which is at a record low in South Africa, this is the record low repo at 3.5%. You actually, have increased disposable income as your debt servicing costs would have reduced, and the cost of financing, certain asset acquisitions like property at a time like this is certainly, significantly cheaper. But of course, one would have to look at, their own affordability and assess it, in the balance of all their needs, looking at all their personal, opportunistic, and investment assets.
And Ricardo, I think one of the big things with that, and something that I know a lot of the viewers are slowly beginning to appreciate, is that you cannot look at any asset class in isolation. You also certainly cannot look at property as an asset class in isolation, because sometimes people think, okay, I've got an interest in property. I don't need to keep up with what's happening globally, the effects that it has on South Africa's economy. But unfortunately, that's not the case. The various things that happen in other parts of the world do have an impact in what's happening here at home, and sometimes does essentially also affect your various investments. And which probably brings me, to the next question, which is then, any tips you'd like to share with viewers at home when it comes, who are particularly looking to grow their investment? Because I'm sure a lot of people are looking at different ways during this economic climate to grow their investment, as you're saying. with interest rates being so low, you're finding that you have access to more of your disposable income. Some people perhaps by this point would have paid off a significant portion of their debt. So you're now finding that you're more liquid than you were pre-lockdown. And you're probably thinking, okay, what are these best ways that I can go about investing? I think some people are even commenting about how, lockdown for them was also an opportunity to not eat out as much, and, you're not going out as much. So you're able to actually have a bit more money in your pocket relative to when the world was what it was pre-COVID. So what would you give, what tips would you share to viewers at home who are right now looking to, start investing and essentially grow their wealth?
For sure. A starting point is really having a budget and understanding where your money is going. As mentioned earlier, the needs analysis is quite important. Have a goal-driven approach towards investments. Invest for the long term, whilst also building up a small emergency fund for those short-term liquidity requirements that you may have. The importance of professional advice from financial advisors or investment professionals is paramount. So seek out a financial advisor, and invest in an institution that you trust, and make sure that all your investments are matched with your objectives and your expectations, and you understand your attitude towards risk. And very crucially, I need to reiterate this again: do not make decisions based on short-term market movements. Stick to the long-term gain, so that you can stay participating in investment returns. In fact, there's often a gap between investor return and investment return, and that is often driven by that investor behavior, where investors are inclined to sell out at market crashes and want to buy once the markets have rallied. In fact, investments is the only market where individuals don't want to buy when there's a sale and want to buy when prices are hiked up.
Ricardo, as you were saying, people shouldn't make short-term, shouldn't make investment decisions based on short-term market movement. You actually reminded me of earlier this year when we saw the Sasol stock just doing all sorts of things. And, I saw various people almost trying to time it. They buy at a certain point, sell at a certain point. I mean, some made money, but there was quite a lot of blood on the floor. I think a lot of people thought they could time and rig the system and make a quick buck with the Sasol stock, but so many people got burnt. I know a few people that were able to get out and sell at the right time and were able to kind of make the return that they wanted, but a lot of people didn't. So really understanding that this isn't a short-term decision. You mustn't try and attempt to rig the system thinking you'll make a quick buck, because more often than not you'll probably get your fingers burnt and lose quite a bit of money. And really understanding that this is a long-term, and even if you have a short-term goal, then use the right instrument for that short-term goal, as opposed to using a different instrument that won't yield the required results. Ricardo, before I let you go, what kind of then services from an Absa investment and advisory point of view are viewers able to access at home?
For sure. So Absa is a full value suite, end-to-end financial services company, providing services across banking, investments, advisory, including will and estate planning, as well as life insurance and short-term insurance. So from an investment perspective, you could invest into direct share portfolios through our stockbrokers and portfolio managers. You could invest in unit trusts through our multi-managed funds and single manager funds, as well as our structured and guaranteed products. And also some of the traditional savings and deposit products within the banks, which are at very competitive rates.
And Ricardo, I think we're going to leave it there this evening. As I've promised, viewers at home, we're certainly going to invite you back because we want to have a better understanding of some of these other investment options. I mean, we speak a lot here on the Private Property Podcast about property, the various ways to maximize your property investments, the various ways to make sure you structure your portfolio as efficiently as possible. But of course, there other asset classes that we're able to tap into. And that could probably also make sure that it helps us meet some of our property goals, you know? So I think if you end up wanting to, let's say, buy a block of flats in 3 years' time, how can you use a different way to make sure that you're saving and investing in order to be able to whether save up for the deposit, perhaps, or even save up for the deposit and the transfer fees combined. So we're certainly going to have you back on the Private Property Podcast, Ricardo. Thank you so much for joining us this evening.
Thanks for having me.
And that is Ricardo Smith, who is the Head of Investment Strategy at Absa Global Investment Solutions. And ladies and gentlemen, that of course brings us to the end of the Private Property Podcast with myself, Zama. And as it's Wednesday, I do not leave you alone. We are of course about to have the First Time Home Buyers Show with Esty Claassen, where she'll be speaking to somebody who needs no introduction. If you've watched the Private Property Podcast, you've certainly watched Leroy Slava, who's been a guest with us before, and you'll be learning about how he was able to essentially make sure that he flips his first home and effectively turn it into an investment. So if you want to learn those tips, tricks, and tools in flipping your first home, then do stay tuned to the First Time Home Buyers Show. That's it from me this evening, and as usual, hoping that you're staying home and staying safe.